Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Monday, June 23rd. Well, firstly to the S&P 500, and here we see a change of trend today. Candle that's made a lower high and a lower low, but a day where the sellers have lost commitment as they traded down below the low of the previous day's trading. It does suggest that we will potentially see the buyers come back into this market. The buyers have actually closed with control of this candle by closing up towards the highs. And it suggests a very real possibility that we could see this market making new major highs either tomorrow or in following days. Now, if the market does continue to come off, however, we should have some strong support at the previous resistance level at 1955, so a very strong area of support. Now, we do have a bullish market in all three timeframes, and the buyers coming into this market in line with the short-term dynamics not favouring the sellers is the most likely route that we will see the market heading. So we will be watching the high of the current candle, which is very close to the major high at 1963. It's actually at 1963.74, so we will be watching that very closely. But certainly the short-term dynamics in this candle with the sellers losing commitment does favour more buying coming into the market. Moving to gold futures, and following that very large white body candle, we saw a candle where basically the buyers lost some commitment to the upside, and that's little wonder with it being an extreme day for the previous day's trading. For today's trading as it's completed, in bar chart terms, it's an inside day. It does raise much doubt about the potential for the market to continue trending to the upside, but we have seen the buyers close with control by closing up towards the high of the current candle. Now, in candlestick terms, however, because the trend is still up, this is a potential hanging man type pattern, not quite perfect, but the sentiment is here, and it's all about the reduction in the size of the body, the small body here. So we will be looking for a lower high and lower low. Now, the problem here, however, is that it's not likely that we will see that occur. 1309 has been strong support in the recent past for the last two candles, in fact, and prior to that has been fairly strong resistance. So that's why we're seeing that change of character in from from resistance to support. So there's a very good opportunity for the buyers to come back into this market and trade up through the highs of these candles up through 1322. If we see that occur, a test to 1329 is very likely. We are bullish in the medium and fast term time frames by trading above each of the Ichimoku indicators here, the Kijun and the Tenkan-sen, but we are likely to see some strong resistance around this 1329 level up to about 1331 because we have the top of the cloud there. So we will need to see the buyers very, very strong to trade the market up through that area. And if we can close in a bullish manner up through 1333 and we get some strong follow through, we could end up trading back up to the 1350 level. Now, to the downside, if we trade through 1309, there should be strong support around the 1300 round number, and that coincides with the bottom of the Ichimoku cloud. Moving next to NYMEX oil, and here for today's trading we've seen a very large black body candle with the sellers coming into this market quite strongly. Now 106.95 has always been a number that has seen the market reject it from, and prior to today's trading about a week or so ago we saw the market test on 3 occasions above there and be rejected from there, failing to close above that area. For the last two trading days prior to today, we've seen the market attempting to build momentum, finding resistance at 106.95, but today opening up above there and then selling off very strongly. So the sellers have come into this market strongly. 106.95 is a very important area, and as this new candle is trading, we are trading down below the Tenkan-sen, suggesting something of a change of sentiment in the market, but finding support at 105.31. So that's an important area. This market is bullish in the longer term and medium term time frames, so it wouldn't surprise to see the buyers come back in around here and have another test up to the 106.95 level. But one thing to watch out for is that the market has set up for a potential new lower peak and lower trough, giving us a potential second time frame downtrend. So here we have a trough, a peak, a higher trough, a lower peak, and if we can trade through that trough, we'll have a lower trough, so we'll have a series of lower peaks and lower troughs, so a change of trend in that second term time frame. So that could be quite important, and then we would be looking to the area around the Kijun-sen at 104.64 to hold as strong support. Next, moving to wheat futures, and here we see continued black body trading down below the Kijun-sen, the Tenkan-sen, and the Ichimoku cloud. A bearish market in all three timeframes. This market has been strongly negative since the middle of May. Very, very strong first and second timeframe downtrending price action, series of lower peaks, lower troughs. And once again, for today's trading, we've seen the Tenkan-sen holding as resistance, and that's what we see when we have very strong downside momentum in that short-term timeframe. The market is interacting with the important 575 level. We're testing just there at the moment. And if we trade down through there in a bearish manner, we could quickly see this market trading down to 575. Above here, if the market can trade through the Tenkan-sen, which is now trading at 586, potential resistance of 590, and then at the round number 600. So a very, very negative market here. Certainly not a market that anyone would want to taking any long positions in. Next to the US 30-year bonds, and here we see the market congesting between the resistance around the Kijun-sen, which is trading at 136.12, and support down around these lows, roughly about the 134.15 level. So a very, very strongly congesting market here between these extremes. Strong downtrending price action leading to congestion does suggest that the next move may be to the downside once again. So we will be looking for a potential break down below this low. Now that low coincides almost with the bottom of the Ichimoku cloud, so if we see a bearish breakout down below there and below 134, we could quickly see this market trading down to 132. But by the same token, if we break out to the upside above the top of the cloud and above the Kijun-sen at 136.12, we could see the market turn around. The buyers come in solidly to trade the market back up to 136.31. But at the moment, neutral trading in the longer term time frame are now trading within the cloud, so a lot of that bullish bias that we had in the market since early April has really evaporated, and we are waiting for this market to resolve itself either to the upside with a breakout below the congestion area, to the downside with a breakout below the congestion area, or to the upside above the Kijun-sen indicator and the Ichimoku cloud. Next, moving to the S&P 500 futures on the hourly charts, and here for the trading day that has completed trading, we saw the market test above each of the Ichimoku indicators in a fairly bullish manner, attempting to trade above the first pivot point resistance level, but being strongly rejected from there. That highlights how important these pivot point levels can be. The market then finding support at the first pivot point, middle pivot point level, then trading off through to the Ichimoku cloud to find support at the Ichimoku cloud and eventually trade within the cloud. At the moment, the market is now trading below the cloud, so technically giving us a bearish market in that longer term time frame and suggesting that there is potential for the market to trade lower over the next day. So we will be looking for the market to test down to the first pivot point support level at 1947.79, 1948, and then down to the next level about the 1944 level. So potential for the market to come off. We are trading below the Kijun-sen and Tenkan-sen, and if we look here at the Chica span, that's supporting negative sentiment in the market at the moment. So the suggestion here is that if we see some follow through, and we're not seeing that at the moment, we're seeing some buying in this hourly candle that is developing. And if that turns into a negative candle and we see some decent follow through, we could see a negative market for the remainder of the trading day.